Welcome to the It Takes a Village podcast by Village Bank, where we bring leaders with expertise in finance, accounting, entrepreneurship, leadership, and branding into our village to help entrepreneurs like you in our community. As an entrepreneur's bank, we hear all the time that you want to know more about the financial nuances of starting and running a business. These questions are profoundly important and can be incredibly stressful. That's why we're inviting prominent leaders and friends of our village to weigh in and build a village of answers and connections on the It Takes a Village podcast. Thank you for joining us. Today we're talking to Scott Schake, Senior Vice President at Central Minnesota Development Company, an SBA loan provider and small business financing expert. We're also joined by our very own villagers who specialize in SBA lending at Village Bank, Tim Walker and Kraig Kliber. As relief and recovery efforts from COVID-19 continue to have an impact on small business owners, our experts talk about how the SBA has stepped up for small businesses and what the future could look like around SBA financing opportunities.
All the current events that are going on today, and between COVID and et cetera, and how do we continue to support businesses, not just in these tough times, but as a community bank with opportunities too to change their business model and for them to figure out how they're going to do business when we can't be sitting in the same room together. And that takes an investment. So sometimes it is in fixed assets where you use the 504, or sometimes it's going to be in technology, it's going to be through acquisition, et cetera, where you could use a 784. So I think that I think that we're going to see more and more SBA lending. Community banks continue to do what they're supposed to do and get money out to Main Street and help businesses out. I also think that, as we continue to look at SBA, we're going to have to continue, banks will have to continue to partner more and more with SBA to lend through some of the challenges we're going to have today.
One thing that we have to make sure we stay in focus with is the fact that there may be a lot of opportunity and to not only to help the customer, but to help the bank with refinancing. Some customers are struggling a little bit due to the COVID-19 pandemic. So SBA 7A is a great tool to help refinance existing debt. In most cases, we will be able to spread out the amortization a little bit longer to free up some cash flow during the trying times, and also, if we're starting to maybe see some deterioration in collateral values and that kind of thing, that's another way that we can leverage the 7A product to help continue to lend to these customers.
Is there an opportunity to refinance a 504, and what are the rules behind that?
There is which again is a relatively new program. There's a 504 refinance program now, which does allow refinancing. As we sit today, there's some discussion about changing this and opening the program up a bit. As we sit today, we can't refinance an existing SBA loan, 504 or 7A, with a new 504 loan. We can refinance commercial loans or contracts for deed, things like, other types of debt. But the 504 refinance does not allow for refinancing existing SBA-backed loans. As I said, there's some discussion about changing that. In fact, more so now than ever because of the COVID, issues and small struggles of small business. It isn't done yet, and hopefully we'll see something in the next few months on that. And if we do, that will certainly be some big news. So specifically to answer your question, we couldn't refinance if your customer had a 504 loan. We can't refinance that loan right now. But if they have let's say they have a conventional loan that's coming up for renewal, or the balloon is coming up, or they've purchased their property on a contract for deed, for example, that's another perfect way to use the 504 refinance to get them out of that temporary or interim financing structure into a long-term fixed interest permanent financing structure. an option that will be in high demand over the next couple of years. It was introduced, it was a temporary program several years ago. It went away. It's now come back. When it came back, the economy was very strong. Credit was, much more available. The refinance program didn't get used a lot, quite frankly. We think that going forward with, maybe some economic struggles and maybe credit being a little tighter and so forth, that 504 refinance will be a great option.
Can you guys talk about what the SBA, both the PPP, the EIDL, some of the other relief options that are out there that may not be out there forever or for long term, but have been available? Can you guys speak to what that has done for Main Street businesses?
When we look at the CARES Act, is really two different things that have been a huge help to borrowers. One, existing SBA 7A loans and the 504 loans that are out there, existing loans. The SBA has agreed to make 6 months of payments. So that's principal and interest payments for 6 months on any existing loans. Also, as a part of that, any new loans that we do now between now, I guess, and the end of September, I believe, we also will have the first 6 months of payments made by the SBA, both on the 7A and the 504 side. So right there, that's a huge help for our existing customers that have those loans to help with cash flow, as there may be situations where revenues are down due to COVID. And then secondly, obviously, and the one that's been most popular the last 2 months is the PPP loan program. And we're kind of on the tail end of that now, but really that was a temporary loan program to help businesses struggling with the COVID environment to make sure that they had payroll for their employees for a 2-month time frame. We're getting to a place now, the funds there's still funds available out there. Last time I checked, there was still probably $100 billion in funds available for the PPP loan program. That will be, as it stands right now, it will expire at the end of June. And now we will be entering into the debt forgiveness portion of this, which for the SBA, or from the SBA's perspective, really this is kind of a new adventure for us. I've been involved in 7A lending pretty much all of my banking career, which now goes back almost over 30 years. But I've never been involved with an SBA loan program where the loan itself could be forgiven. So to add to the timing, the challenges that we've seen over the last 2 months, the forgiveness piece is a whole new realm for the SBA and for the banks involved. So the big thing is, as we get more information, we will be communicating it to our customers in a timely fashion, and we will then try to streamline the process of looking at that debt forgiveness so that everybody's informed and understands what's expected, both from the bank and from the customer's perspective. From a timing perspective, once those applications come into us for forgiveness, the bank actually has 60 days to review those. And then the SBA, in turn, actually has 90 days to review our decision. So customers also need to understand that the debt forgiveness piece is going to probably take another 6 months or so for us to kind of work our way through. And we still expect additional guidance from the SBA on that process and expectations on what sort of information the customer needs to provide for us for that debt forgiveness.
I was just going to put in a plug for the SBA specific to PPP loans. we did not do PPP loans here. We did a local loan program through the state of Minnesota called the SBEL, or Small Business Emergency Loan Program. It was very similar on a smaller scale. And it does have a forgiveness component to it too, which we're waiting for guidelines as to how to determine that. But the SBA kind of took a little bit of a bad rap on both ends of PPP. First they were getting criticized for not getting the money out fast enough, and then they were being criticized for getting the money out too fast because they didn't have policies and procedures and so forth. They did an incredible job. I think the stats are in 14 days, I think there was 14 years worth of SBA loan money or loans processed. So in other words, what it took 14 years for the 7A program to lend out, banks, with the help of the SBA, lent out in 14 days.
Yeah.
So that put money in small business owners' hands immediately. So wanted to kind of give a plug for our friends at the SBA. They work tirelessly day and night, as you guys did at the bank as well, to make that happen and to help save or help the small business owners to get through the crisis. And now hopefully most of them will make it through, and we'll have a brighter future down the road here.
Yeah, to kind of piggyback on what you said, Scott, I just last week from NAGO got the statistics on kind of what has been processed through the end of May 26th. There were 4.4 million PPP loans processed since the beginning of April, for a total of $511 billion. The average loan size is about $115,000, and there were 5,511 different banks or lenders out there making those loans. So it was a huge effort by a lot of people in the financial services industry. The SBA has been working tirelessly with the Treasury, which was a unique situation also. Typically, they don't necessarily marry like that, like they have had to with the PPP loan program. So it was an amazing feat. I've never seen, in the years that I've been doing SBA lending, I've never seen anything. While there has been some hiccups and there has been some delays in the information we need, it was a Herculean effort to get this money out to the customers that needed it in the country. So it's pretty amazing. And not only that, but as a small community bank, Village Bank spent a significant amount of time and resources to get these loans out. It was all hands on deck, from our sellers to our marketing folks to our lenders to our credit analysts and everybody to get these loans in a timely fashion. So I also have to give kudos to Village Bank and the staff that we have here. Literally worked 7 days a week, long hours to get the money out to the customers as needed. So I'm proud to be a villager.
And I think, more recently now with the issues involving the protests and destruction and so forth of businesses locally, the SBA, among other programs, but the SBA is going to be critical to help those folks to get back up on their feet again, and hopefully, rebuild their businesses and rebuild the parts of Minneapolis and St. Paul that were damaged.
Not only around the coronavirus, but in times past, SBA and SBA loans kind of get a bad rep because of some of the additional fees or the higher rates or whatever it might be in comparison to conventional loans. And looking at that bad rep, How has that maybe changed or shifted now after coronavirus?
I think historically the SBA has gotten a bad reputation. And I don't want to say it's gotten a bad reputation because I don't believe that's accurate. I do believe that there's been instances in which small business owners have had maybe not the best experience utilizing the SBA's platform and lending process. But frankly, that comes down to maybe more on the front end in who are they working with on that particular product, whether it be a 7A loan or a 504 loan, because there is no substitute for experience. And then two, how well do they know the program? Because if they know the program well on the front end, and this again speaks to experience, but then as we alluded to earlier, that may allow that process to be much more nimble and very specific to a time horizon. Whereas if people are fumbling through the program, that's where you suddenly get to 60 days and there's this additional paperwork and et cetera. Now, is there some additional paperwork? Of course there is. Does that really have anything to do with additional requirements on behalf of the borrower? I would say not. And frankly, if it's utilized properly, it's quite literally one of the only financing methods that are out there for that particular business and industry within that industry type to be able to obtain financing. So while there are maybe a couple extra hoops to jump through, they're required hoops. And the guarantee fee, it's a whole different process, but at this point in time, given COVID, the guarantee fee becomes essentially irrelevant because payments are being made for them for the first 6 months. So that in all likely circumstances, that's essentially covering their guarantee fee on the transaction. So you could look at it from that perspective. On the 504 side, I would say that somewhat speaks for itself at this point in time. In my mind, it's somewhat of a no-brainer given the rates and long-term fixed rates. I mean, as mentioned earlier, you're sub 3% on a 25-year fixed rate for 40% of the debt. I think COVID is going to show us that at some future point, inflation is going to kick in. We don't know when that's going to be, but I would certainly, as a small business owner or sitting in an owner-occupied piece of real estate, I would absolutely relish an opportunity to be at a sub 3% rate 5 years from now. There's a lot worse places to be from a financing perspective, that's for certain.
And to piggyback on kind of what Craig is talking about, the reality goes back to kind of what Scott said. If the customer is dealing with an experienced banker that understands the SBA products and can communicate expectations up front and identify the items that are needed, the process is relatively smooth and no different than doing underwriting and working through a conventional loan. So the key really is working with a experienced lender, understands the SBA products, and can communicate clearly up front what the expectations are from a timing perspective, from a cost perspective, and that sort of thing.
A real life example that just finished up last week. Last fall, I guess it was, we started working with this client. It's a husband and wife. The husband's dream was, going back to my dream maker comment earlier, he was a chef and his dream was to own his own restaurant. He did that. A bank assisted him in making his dream come true by providing him a 7A loan, startup loan, to find his location, buy equipment, renovate the building, open the restaurant. He was doing very well and had operated for a little over a year, about a year and a half. The opportunity came up to buy the building that he was renting. We stepped in and provided a 504 loan along with another bank to assist him in buying the building. It took a little while. There was a couple of issues that arose during the closing process, and so the 504 closing part of it took a little while to get done. In the meantime, along came COVID-19, And then the restaurant is closed. One of the things that we have to do when we close a 504 loan is to certify, we and the bank lender and the customer has to certify that there's been no adverse change to the borrower's financial conditions since the time of approval. So that was my initial, when this first happened, when the restaurant was closed, I immediately said, well, how do we certify that there's been no adverse change to a restaurant when the doors are closed and we're not sure exactly when they're going to reopen? Well, SBA did step in. It took a couple of weeks to get things written and so forth, but they did step in and they put out what was called the COVID-19 no adverse change agreement. It basically says, if you read through it, it says that but for COVID, there has been no adverse change to the business. In other words, had the virus not come along, the business would still be open, still be operational, still be profitable, and still be able to close the loan. So we reviewed the 2019 financials. We reviewed the year-to-date financials through February, and things were going along just fine. Restaurant was doing well. And then along came March 17th with the executive order to close that forced them to close their doors. So long story short, we were able to execute the COVID-19 agreement. It's a tri-party agreement really between the borrower, the customer, CMDC, SBA, and the bank. As Tim or Craig alluded to earlier, because of the CARES Act benefit, not only were we able to close the loan for the customer and get him his financing in place, but when the loan funds, he will have 6 months of payments made on his behalf due to or from the CARES Act, which will enable him to, or at least we hope anyway, we expect, enable him to get back on his feet. We expect that, long term, it'll be a success story. But again, thanks to the SBA in doing what they did, not only allowing us to continue with providing the financing, but then second of all, offering up assistance to enable him to get back on his feet from a cash flow standpoint, having 6 months of payments, made on his behalf. So maybe that's a good way to wrap things up. It was a great, a kind of a story that hit all ends. It hit the startup nature of the business with a 7A loan, and it hit the long-term financing for the real estate for the restaurant with a 504 loan, and then picked up with, helping this business owner to get through the challenging times here and hopefully move on very successfully.
Any business owner currently looking for financing of whether it be tangible assets or intangible assets, an SBA program and financing solution should certainly be one of the product suites that we're looking at, not only to help from a cash flow perspective through longer AM schedules, but also where rates are today, especially on the 504 end. Even on the 7A end, rates are at historic lows. Prime is at a ridiculously low rate. I don't see rates necessarily spiking anytime in the interim or near term. So it absolutely should be a product that they at least inquire on. And there's also no substitute for an experienced SBA preferred lender to have that discussion.
Thanks for joining us on It Takes a Village, hosted by Alicia Webb. If you liked what you heard today and want to hear more, follow us on social media at Village Bank Online on Facebook and Instagram, and Village Banking on Twitter.